Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind corporate filings. And today we're diving into Capstone Green Energy Holdings, Incorporated's latest report, which feels a bit like a financial alchemy experiment trying to turn investor cash into, well, more cash. Before we start decoding this filing, if you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these reports even further. Alright, let's get straight into it. The big news here is that Capstone Green Energy Holdings, Incorporated, a company we usually see talking about clean energy solutions like their microturbines, has announced the closing of some financing deals. This is what they call a PIPE, which stands for Private Investment in Public Equity. Think of it as bringing in private investors to buy into the company's publicly traded stock. Now, this specific document is a Form 8, which is basically for reporting major events that shareholders should know about right away. They have to check a lot of boxes to make sure they are following all the rules. But the headline here is really about money coming in. Capstone trades its common stock on the OTCQX market under the ticker CGA. This is important because it tells us where the company's shares are available for public trading. The core of this report, under Regulation FD, which ensures everyone gets the same information, is about the successful closing of these private financings. They issued a press release back on the 25th of November announcing this. What does this mean for a company like Capstone? Well, when a company needs cash, it has a few main options. It can borrow money, issue more stock to the public, or do private deals like this to bring in specific investors. This specific filing tells us that these financings have now been completed, meaning the money has been secured. It is crucial to understand that this information, while important, isn't being filed in a way that makes it subject to the usual strict liability for accuracy under Section 18 of the Exchange Act. They are essentially saying, here is the announcement, but please don't sue us if there is a minor hiccup in this specific press release. This is a common disclaimer to protect the company from certain legal risks associated with these types of announcements. Moving on, the filing also lists the exhibits. The most relevant one, Exhibit 99.1, is the actual press release announcing the closing of these financings. And then there is Exhibit 104, which is the cover page interactive data file, essentially a machine-readable version of the filing's first page. The story here is pretty straightforward. Capstone Green Energy Holdings, Incorporated, has successfully raised capital through private investors. This injection of funds is typically aimed at strengthening the company's financial position, perhaps to fund new projects, cover operational costs, or pay down existing debt for a company in the clean energy sector, which often requires significant investment in research and development, manufacturing, and infrastructure. Access to capital is vital. Now let's think about what this PIPE financing implies. On the positive side, it shows that investors were willing to put their money into Capstone, believing in its future. This can be a vote of confidence. However, it is also important to remember that these private placements often come with specific terms. Investors might get preferred stock, warrants, or other rights that can affect existing shareholders. Without seeing the details of the press release itself, which is attached as an exhibit, we can only infer the general purpose. Typically, when a company does a PIPE financing, it is because they need cash relatively quickly, or they anticipate that issuing new shares to the general public might dilute existing shareholders' value more significantly, or might not be as attractive in the current market. This move suggests Capstone recognized a need for capital and found receptive private investors. We need to look at the bigger picture for Capstone Green Energy Holdings. They are in a growth industry. The demand for renewable energy solutions is increasing globally. Companies like Capstone, which offer products like microturbines, are positioned to benefit from this trend. However, the clean energy sector is also competitive and capital intensive. Many companies are vying for market share. And success often depends on technological innovation, cost efficiency, and access to funding for expansion. By securing this private investment, Capstone is essentially refueling its engine. This capital could be used to ramp up production, invest in new technologies, or expand its sales and distribution networks. The alternative for a company in need of funds could be taking on more debt, which increases financial risk, or issuing public shares, which can dilute the ownership stake of current shareholders. This PIPE financing suggests they found a balance they felt was best for their immediate needs. Looking at potential risks, there is always the concern of dilution. If the private investors receive a significant stake or conversion rights, existing shareholders could see their ownership percentage decrease. Also, the terms of the deal are crucial. Were the shares issued at a discount? Are there any restrictive covenants attached to the financing? These are the kinds of details that would typically be elaborated on in the attached press release. Another consideration is the company's overall financial health leading up to this financing. Was this a proactive move to fund growth or a reactive measure to shore up a weaker financial position? Without diving into their specific financial statements from this period, it is hard to say definitively, but PIPE financings are often done when a company wants to maintain a certain level of financial flexibility or invest in opportunities that might not be feasible with existing cash flow alone. In my opinion, this PIPE financing signals that Capstone Green Energy Holdings Incorporated sees opportunities ahead that require additional capital. It is a strategic move to ensure they have the resources to pursue their business objectives in the competitive clean energy market. The success of this maneuver will ultimately be judged by how effectively they deploy this newly acquired capital to drive growth and profitability. It is a step towards potentially strengthening their position, but like any financial maneuver, it requires careful execution and favorable market conditions to yield the best results for shareholders. Alright, that is our breakdown of Capstone Green Energy Holdings, Incorporated's latest filing related to their financing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.